All right. So yeah, thank you all for joining today. Maybe we'll have some more people who will join in the next couple of minutes. We had quite a lot of registrations. So today we want to talk about how you can like accelerate the growth and the building phase for your startup and pay later. And then with paying later, we mean especially external supporters and service agencies. So this is what we do at Capsly. We bring together startups and service agencies and enable such kind of collaborations. And in the next maybe 30 to 40 minutes, we will dive deeper into this topic, and we'll also have time to answer questions. Quickly about myself. So I am the founder of Capsly. I hold an MBA from the University of St. Gallen, and I used to work as a global product manager for neurosurgical devices. Yeah, and lived in multiple countries. I like being outdoors and that kind of stuff. That's why I'm in Switzerland, because I love the mountains. And yes, so I'm working on Capsly for the last 2 years. And I've always been curious about incentivizing employees, giving them company shares and those kind of topics. And then I thought about how I can maybe do this myself to work for company shares before the idea came up to really create like a central platform for this that facilitates such deals, which is what we're doing with Capsly. So here's a rough outline for the next 30 minutes. So we will talk about what startups really need. I will also talk a little bit about cash management, as obviously that's also the topic of today pretty much, but take a bit of a wider perspective on it. And then we will show some options for this build now and pay later model, and obviously also show the solution and how we can support you at Capsly to do this so that you can build your companies faster. And at the end, we will have time for Q&A, so you can ask all your questions at the end. If you have very specific questions when I'm on a slide and something is super unclear, then please also feel free to speak up in that moment when it's suitable. And otherwise, if you have questions and don't want to forget them, you can also put them in the chat. And we will go through them later. And Andy can have a look at those questions then as well, and we will make sure to answer them at the end. All right, so what we would like you to take home from this session today is that you will understand better how to work with external supporters and especially service agencies, and of course how you can compensate them. And we also want you to learn how you can identify your needs and really focus on your core activities, especially in the early stages of the startup journey. And then obviously also take home how we can help you at Capsly, and identify when you're ready, when we can help you. All right, so coming to the startup needs. What do startups really need? I mean, the most important thing is actually customers, right? You need to talk to them first to understand if really your idea and the solution that you want to offer them is what they need. Do they really have this problem? So the so-called problem solution fit is the first thing that you should work on, right? And you also obviously need people to create those solutions. And then you need channels. So channels means that it's a way how you can bring those solutions with your people to your customers. I also put price here because obviously you need to earn money. So price is just like a small number maybe, but actually it's quite important to find out what's the willingness to pay of your clients and how you can earn money. And then just to be able to do this, you need a legal entity, you need some contracts maybe with your customers, those things, so that gives you the right and the legal entity so that you can earn money and pay taxes. And many people, of course, ask, okay, what about a business plan, a financial plan? I mean, those things are nice. I come from a business background, and especially business people tend to write up long business plans in the beginning, or used to. I hope it's not the case anymore so much. But they are pretty worthless in the beginning, to be honest, because you never really know exactly if your idea was right. There are so many assumptions and so many variables. So this is the key is really to talk to the customers first and find out what they need. And really, no one else can do this for you. So this is not a task that you can really outsource. This is something that you need to do. And for this also, you don't need any money. So maybe you've been asking yourself, there's money is not on this slide here. And this is really something that comes later when you know what you want to build and when you have the operations and can execute on your vision and really build this solution at scale. And clicking doesn't work. To summarize this, basically we have created the Capsule matrix. So there are the different stages or the startup phases, like the idea phase, the concept phase, validation, traction, etc. That basically every startup goes through. It depends a little bit in which sector you're in, whether you're like a biotech company or a B2C marketplace. Obviously, the duration of this journey is quite different. But those are the rough phases that startups go through. And at every phase, you have different needs. Basically, you need to run different tasks, and those are quite specific also to those stages. And in the beginning, it's really more about like design thinking and taking the customer perspective, finding out what's your value proposition and the problem solution fit. And so you can find this matrix on our platform, on our website as well. And you can click on every single field, and that gives you some ideas and some guidance on what you need to do at which stage. And we want to give some guidance there and help startups to identify what they need to do, but also where they maybe need help because they don't have the expertise or they have never done this before. So this is something, we just provide as a framework. And what I would recommend you to do, read those books, because especially for the early stages, the idea and the concept phase, like I said, I believe this is something that you need to do yourself, and you can't really outsource this because you need to talk to the customers. Steve Blank always says, get out of the building. And this will really be helpful. And actually, the Lean Startup is based on Steve Blank's book, The 4 Steps to the Epiphany. And the business model canvas is also based on those things, so they're all quite related. You guys probably know the business model canvas and the value proposition canvas. So those are great things to map out your ideas. And they have, I think, last year released the third book, Testing Business Ideas. And this makes it really tangible how you can work with those models, how you find out your assumptions, how you can test them, and learn from this and adjust your business model and value proposition. So I would really recommend you to read those books because they are great ways to understand how to get started with your startup. Yeah, so how can you cover those needs, right? And there are different options and things out there, startup offerings. Many founders think about fundraising first, right? They hear startups, you hear all these great success stories. They have raised so many millions, etc. So you need to go out there, have a pitch deck, and raise money. I would say that's wrong. And unfortunately, also many incubator and accelerator programs teach you that. So they focus on the pitch deck and all these kind of things, and that's often just a waste of time. And fundraising requires a lot of time. But to do fundraising successfully, you need to build traction and you need to have a team to build this traction. So first, it's difficult, right? Do you get fundraising first and can then do hiring and get the people, but actually you need sort of the people first as well. So you need to find ways around that. Incubators are great for early stage companies, for advice and mentorship, especially in Switzerland also, they're great programs. Then there are venture studios, which is not that common yet, but it's definitely growing. We see a lot of new venture studios popping up all over the place, but they usually build their own startups. So they internally build ideas. So you don't really get access to this, even though their success rates are much higher than those of VC-funded startups, but it's sort of like a closed community. Then you have Upwork and Fiverr to cover some of your needs, and similar freelancing platforms. So this is probably great for some smaller tasks. Hiring, I mentioned. I think what people often forget is that it's also risky. So there's this general advice that you should hire slow and fire fast. And especially for startups, this totally makes sense, because if you have the wrong people in the team, this can totally screw up your startup journey. So you want to make sure that you have the right people in your team, and at the right stages as well. So don't hire too soon as well. And then there are agencies which help you with professional executions. So that's sort of similar to the venture studios, because they do this on a daily basis. They are open, so you can get access to them, but obviously they are expensive, and often early stage startups cannot afford this. So this is why we have focused on making this resource available to startups and making this affordable, because we believe at this more earlier stage, or from early stage to like converting to a growth stage, this can really have a big impact, but is not fully used yet. So that was my input on what startups need, and then the ways you can get this. Obviously, cash management is very important in this stage as well, and in general for every startup. And usually everyone starts bootstrapping, sort of, even if you raise money later on. And then also cash flow management is important. Everyone knows that ideally cash in is bigger than cash out, but that's difficult in the early phases. What's maybe less well known is that you should also collect money early and pay late. So that's a model that Amazon has used, I believe, since the beginning, to finance their growth. And their cash flow is so big they could buy some of the biggest companies like every day almost. So this is really a huge benefit. And what can you do to collect money early? One great way of doing this is consulting, because you get to know your customers very well in the early phase, and you learn about their problems and you build solutions for them. This sort of goes together with customized solutions. So maybe if you're building software platforms, you can build this for one client first, and then later on build scalable solutions. And if you're more in the B2C area, crowdfunding and pre-sales, they sort of go together as well, where you can also check, okay, is there really a demand from the market? Can you sell this new coffee mug, I don't know, to thousands of people already, or maybe some more innovative solutions. And then there are grants as well, more for science-based startups usually. So this is the one thing, how you can be creative about things in the beginning to earn some more money early on, but also especially to get to know your clients better. And then paying late, one very common thing is the supplier credit, especially for drop shipping companies. That's very common, that you can basically receive a good, sell the good already to earn the money, and only then pay your suppliers, which is great for the cash flow, of course. Then in general, variable cost over fixed cost means that, especially in the beginning, you want to be able to adjust quickly and to cut costs very quickly. So that means if you have fixed costs, like if you hired a lot of people, you can't get rid of them very fast. But with these variable costs, you're obviously more flexible. If you work with freelancers, for example, to have that comparison. But there are also other things. And then you can also share the risk and pay people with equity. And now we're coming to this topic of service for equity, and alternatives that we will dive into a little bit deeper on the next slides. Yeah, so to summarize this, basically you want to get what you really need and focus on the core activities. That means really on what the customers need, try to sell them something. don't focus in the beginning on fundraising and pitch decks. That's usually a big distraction in the beginning. Really build that traction first, and then fundraising will also be a lot easier. Yeah, so that will really help you to build a relationship with your customers and build a solution that they really need. And yeah, on that journey, we obviously want to help you to build those products and to get those to the market. So as we say, like, we provide the rocket fuel from service agencies to accelerate you to grow your business. Okay, so let's dive into some of these payment options. Or are there any questions so far on the previous slides, like the startup needs and the cash flow management part? Feel free just to speak up.
No, all good from my side, Vincent. That was a pretty clear intro. Thank you.
Okay, thank you, Marcel. Then
yeah, that's also what deals with my my experience. I've already founded some companies, so yeah, you sure.
Okay, thank you, Frank, for the feedback. Then I will carry on and come to the compensation options. So there are three main options that we provide through Capsly that we also believe are like the ideal options for different stages of startups. So the default compensation option is this repayment plan, especially for early stage startups, because it actually provides the most flexibility. So here they are progressive installment payments. So it's basically like a loan. And over time, obviously, the initial service value will appreciate in value. But as a startup, you have the option to pay back the amount at any time. Whenever you have enough liquidity, when you can afford it, you can pay back. Otherwise, the installment payments continue at every time interval. And the good thing is, or what makes it even more flexible, is that this can be combined with company shares in a way that we set it up as a convertible loan, which is a common instrument for fundraising, actually. So that means the service value that remains open can be converted into company shares. So you can compensate the service providers with company shares. And here so this is what you see on the right side. And here we never recommend that you would compensate your service providers with a fixed percentage or fixed number of shares right away, because we say that you should get to know each other first and build a trusted relationship, and only later on then convert this to company shares. And this is really a nice option then for long-term partnerships where you want to align the interests. And in the middle we have the revenue share, which is more for scale-ups when you have more predictable revenues, which means that you should also have historic revenues. And there basically a target return is defined between you and your partner, the service provider, and you would define a revenue share percentage. So that is based on your margins usually as well, depending on the business you're in. All right, so just to make sure everyone understands what is service for equity. So it basically means that you give someone company shares for receiving certain services of that service provider instead of paying them with cash. You might have heard the term sweat equity as well. We refer to sweat equity when it's really more for the internal team. So the co-founders or early employees who really work 24/7 on that startup, and they receive equity for their work, basically. Then the term smart capital is probably also known, just to differentiate from this. It's usually when business angels give you money, but on top they also have some expertise in an area where you are active, or they have a big network and help you with sales and some introductions. Then this is considered smart capital. And sometimes this is accounted for when they invest money, and maybe they receive some kind of benefits, but often also not. And yeah, a more general term is service investing, which really includes service for equity, but also the alternatives with like the revenue share and the repayment plan. So this is more the more general term. Yeah, so what's the potential of service for equity, or what are the benefits? I mean, for startups, it's often the first investment that you get, and it's a really direct form of investment. Like I said earlier, fundraising takes a lot of time. It's quite intensive. Then afterwards, you need to do the hiring. So you basically have these two steps. And here it's a much more direct. You get what you really need, and it improves your liquidity as well. And if you want to build long-term partnerships, then this is a nice way to incentivize your partners and to align the interests. And also, as you can see with these venture studios, because they do this on a daily basis, their startups are more successful, which means it actually reduces the operational risk or the execution risk, and which usually means that you're faster in building your solution or bringing it to the market. And so allows you to achieve milestones maybe before you do the funding round. And then, yeah, why do service providers do this? What are the gains for them? I mean, they're interested in exciting projects, in making their employees happy, and some employer branding, you know, so that they can win even more clients. But also, of course, they want to build long-term relationships with you. So for them, it sometimes makes sense to invest in you a little bit and then work with you over the long term. And of course, as any other business angel or investor, they have the financial upside and that motivation to earn more money in the long term. And basically, they can build a startup portfolio without investing money, which is quite attractive. It's sort of like the ultimate democratization of venture capital, you could say. Yeah, so we really want to establish service investing as a legitimate funding alternative, but it has to be done right. This is why we provide the Capsly platform. On the other hand, there are also challenges, of course, for service investing. So first of all, it's hard to find service providers who are open to do this because they don't have a sticker on their forehead, and most of them don't really have this on their website that states, hey, we just, you know, invest our services into your company. That's something we change actually. So obviously everyone we work with does this, so it's easier to find those. Then what often happens is that if you get a recommendation to a service provider and you negotiate, okay, how can you compensate them with shares? And then often what we heard is there were fixed percentages that were just provided to the service providers, and then that equity is just gone forever. You know, you can't really get it back that easily. And maybe the services were not valued because that's usually the easier part, because they have a service value, but often it's not specified like what is the scope of the collaboration and of the services that are provided. And yeah, once you have them on the cap table, it's difficult to get rid of them. So maybe later investors will not like this. So this is why we say, you know, don't give away equity in the beginning. And I'm always comparing this to like getting married and the partnership there, because also, you know, no one makes a wedding proposal on the first date. Usually once you get to know each other, build a relationship, and that's the same thing that's true here. Yeah, and for service providers, the challenges are also there that, I mean, it's very uncertain the outcome, and but they would have to invest quite a lot of time in the due diligence and finding the right startups, the legal stuff, all these contracts, you know, why would they go to a lawyer and figure out those contracts if they don't even know if that will repay them? So those are some challenges for them as well. So here's a summary of the compensation options. So according to the reward for the service provider in that case and the risk, you have stocks, obviously, with potentially the biggest reward and biggest risk, virtual shares, which is basically the same. It gives the service provider a right to a cash payout at an exit, but they do not really own the shares. and there's a convertible loan. So this is what we use as a setup, this convertible loan and virtual shares, what we recommend. And there's the shared revenue approach and the supplier credit with, the least risk and reward probably. It depends how it's set up as well. And those are also the options that we provide on Capsly. Any questions on this part?
No, from my side, super good input so far.
Okay, thank you. And I will just continue. So basically we want to offer you like an access to a venture studio community. Like I mentioned earlier, those venture studios are usually a closed community. They develop their own ideas, but we enable service providers to become such venture studios, basically to invest their services into startups. And what we see from venture studios is that they perform better than VC-funded startups. And this is basically what the potential that we want to unlock and enable you to do. So basically on Capsly, you get access to top agencies. We all know them personally and spoke to them and vetted them. So we always make sure that they have experience in working with startups. And our contracts, basically our compensation models, make those services more affordable for you based on your needs and the agreement that you find. We are quite flexible there. And basically you have no legal hassle. And what we also make sure is that your IP is protected, or that you get the IP from this project. So when the service provider works with you, we have heard stories where that wasn't the case, and then it was only found out when the startup wanted to sell the company, and obviously then that's a huge pain. So that's also something important when you're working with external people. So we have really specialized contracts for the collaboration of startups and service providers. Even if you work with any other agency, just make sure that the contracts are right, or we can also provide contracts just for normal collaborations. So here's one of our first success cases, Autonomial, which is a medtech and digital health startup. And they have won the Capsly Award, which was our proof of concept actually for our own model. And they received services from, in this case, these two agencies, Digital Chameleon and Digital Health Port, for quality management, regulatory affairs, and for developing their app. And the services were worth 70,000 Swiss francs. And we set it up in a way also that it is not compensated right away with equity, but it can later be converted to equity when Autonomial has a funding round. And we defined that there would be a maximum startup valuation at which this would convert. So even if they raise at a higher valuation, so this is the valuation cap. And we defined a discount, so in case they don't raise at a higher valuation than the valuation cap, then the service providers at least get a little benefit because they basically invested much sooner and took the risk earlier. And the cool thing to see is that they were really able to achieve some milestones that wouldn't have been possible without funding basically otherwise. And now they achieved this before they could go fundraising, which obviously then also should make fundraising easier and potentially increase the company valuation. So on Capsly, basically we provide you with best service agencies. So the way to go would be to create a service request, and then we basically support you with the matchmaking, get you in touch with those service providers where we see a good fit. And then you can obviously talk to them, start negotiating. You can compensate all of them in one place. So we really want to create transparency when it comes to the service values, that they are all tracked, that you can see this, because we believe transparency also creates trust. And Yeah, the contracts, obviously. So that's actually something the service providers would set up. So when they're making a proposal, they would create such an agreement. They can set it up according to Swiss or European law and set up all these compensation options that I showed earlier with the repayment plan, a revenue share, and company shares, meaning a convertible loan. Yeah, and like I said, this can be combined with the repayment plan as well. Yeah, so here again is exactly the summary that I already showed earlier, the three main options, or basically four if you combine repayment plan and company shares. Yeah, so what does that mean for the startups that come to us? What are the requirements? And like I said in the beginning when we spoke about the startup needs, the idea and the concept phase, that is something where you should try to do as much as possible yourself. Maybe you need some support with a click dummy or an MVP or things like this, or some advice and mentorship, definitely. But the execution should be done by the founders because they really need to learn also the problems the customer have and adjust the solution based on this. And when you come with this knowledge and you know exactly what you need to develop, for example, then it's the right time to come to Capsky when you need like professional execution, hands-on support to bring this to the market so that you can justify why you need what and so that you can really define your requirements. And this really helps to find the right partners as well. Before this, it's a bit more of a gamble. And since both sides are taking risk here, yeah, you should come prepared in that way. Yeah, so how do you get service funding through Capsly? So yeah, go through the Capsly matrix to see what you need to do yourself and where you need support as well. Also, then prepare a small pitch deck and some financials because you should treat the service providers as investors, right? But only, you know, like I said in the beginning, don't start with a pitch deck and financials. Only do this once you've validated most of your assumptions. And then you can make a service request to really present your startup in an attractive way also. Like I said, we will get you in touch with the service providers. You should also think about what the compensation models are that are most attractive for you, like this convertible loan or repayment plan, etc. If you're a bit more later stage, maybe revenue share. And yeah, that's basically it. And the last step is to sign the agreement with the service parties and start collaborating. Yeah, and this is how you can basically get started and yeah, how we can support you as well, especially when it comes to the specifications. We also can support you there. So if you have something, feel free to contact Andy or myself after the call. Yeah, and I mentioned the other thing with the matchmaking, faster execution from those professionals, flexible payment terms. Yeah, it's also a nice way to keep your partners motivated for the long term. Yeah, and we also want to provide more than that in the future. So maybe just a quick outlook here to what we're planning to do in the future. So we really want to provide a platform where you can take your idea through those stages and also receive funding. So that's the goal, that we can also support startups financially who have done Capsly deals, so service deals through our platform. All right, so this is all from my side. So now is the time for you guys to speak up and ask your questions, please.